you know pretty much what to trade, right? As you know, every month as we do the monthly outlook and setups, I am picking a giveaway winner. So whoever has a heart badge, and a heart badge is obtained by commenting on every single video, and as you accumulate a lot of comments, YouTube automatically puts like to the right of your name a heart badge, and the giveaway winner that is gonna win full access to the Fanatic Way program. Those are 2 incredible modules with more than 200 hours of content, an amazing strategy, combined with the Fanatic Flicks, which has 150 hours of webinars, backtesting sessions, live trading sessions, and all of that stuff. Trading community, the Fanatic team, where we have plenty of perks, daily analysis, live sessions we host 2 to 3 times a day, weekly webinars, 24/7 support from me and from mentors, and of course one-on-one sessions with me. And this winner is gonna be Sky Vision. So thank you, Sky Vision, for all the support, for tuning in on every video, for showing your love, for giving your thoughts, and for always leaving a comment and a like to the videos. And this is a gift from me to you. So Q4 is going to be amazing for you. So get in touch with me. Let's get you inside the team and get to work. As for the others, make sure you're subscribed, turn on the notification bell, and always leave a comment below the video. Just share your thoughts. Tell me if you liked the video, if you didn't like the video, some feedback. What did you trade this week? What did you do? So you accumulate those hard badges and you can be one of the lucky winners to join the Fanatic team. Now, without further ado, let's get into the video because we have a lot to cover. All right, as always, we're gonna get started with a Dixie. I had a question on my last outlook that was, why do you always start with a Dixie and what is the benefit of it? So again, you can type in Google, what is the DXY, right? And you're gonna be given a certain percentage of currencies. So the DXY is pretty much a basket of Euro, JPY, GBP, Swiss franc, and I don't know, like the Czech krona or something, right? So pretty much this shows you like how strong the dollar is against all the other currencies. And the majority of us are going to be trading pairs like Euro USD, GBP USD, Aussie USD, NZD USD, right? So just by looking at the DXY, you can immediately kind of learn and try to forecast what could potentially happen on those currencies just by looking at this basket. Right, so the DXY, very important because we're pretty much judging the strength of the dollar. Now, before we jump into the technicals, let's have a look at the fundamentals first for next week. Now we have a bank holiday, pretty big bank holiday actually on Monday for the US. However, the Europe session is going to be open and we also have a speech from Lagarde. So again, that does not mean we should not be showing up on that day. Tuesday, rate statement, interest rate decision for the Aussie. So Aussie traders, watch out for this. We are expecting to keep the rate the same, which pretty much might not have a big impact. But then of course the rate statement and what the bank is going to say is what is actually going to give us the volatility. GDP followed on the next day for the Aussie. So looks like a big week for the Aussie. We even have trade balance right there. Euro retail sales, PMI, interest rate for CAD as well. So CAD traders, prepare for some moves on that nasty pair CAD. I don't like it. And a speech from the Aussie. So very big week for the Aussie. GDP for the Euro on Thursday. GDP for the JPY. This one, harmonizing, is not very important because it's for Germany, not the whole Eurozone. So we have quite a couple of news. Again, you gotta be careful. Interest rates right now are the biggest thing, right? Apart from NFP and CPI, interest rates are very volatile. So again, be careful, wait for those to play out, and then of course look to enter into your trades. But I don't see anything to be like extremely worried about for next week. So let's jump onto the charts. Now, the dollar has been bullish for like quite a while, since like June 2021. Like this is pretty much the low. We had a massive uptrend on the dollar, very strong. And right now we had this sort of a pullback, and the market has been chopping around since the beginning of this year, right? So you can see there's the January candle, and from January all the way until right now, the whole year, we didn't make any trend. So you can see actually this year, by looking at the monthly time frame, we are in an overall chop, right? There is no move up, there is no move down. We have been just chopping inside this consolidation. So that kind of means that maybe next year, right, because we don't have a lot until next year, then we can maybe start having some trends, right? If we have a look at the overall range from the high to the low, right, if I just take the lowest low, like the last pullback right there before this big push, the market pulled back below the 50%. And you know what that is, right? Pulling back below discount, which means that the market is getting a discounted price, in order for it to push up. What I immediately see below the 50% is that little bit of imbalance that was filled during the month of July, right? And that month of July, we had quite some equal lows right there. The market swept them with this beautiful pin bar. And after this pin bar, we formed the bullish candle in August, which kind of also prints a little bit of a morning star, but also like a pin bar followed by a bullish candle that is also an engulfing candle is a pretty bullish sign, I would say. So just by looking at the monthly time frame, it gives me definitely more bullish vibes rather than bearish. And just by what happened recently, right? So we could expect more rate hikes for the dollar, and when the rate is hiked, when the rate in the interest rate is increased, that follows with a strength of that corresponding currency. So again, we could potentially expect longs. If we just zoom in, like the most recent level for potential liquidity is this. We have another one right there. So we can expect like this month already open on the 1st of September, and you can see already the move that we made. I'm not sure if this is actually true. Definitely could be, but we can right now expect the monthly candle to continue pushing up, take out this high, maybe even take out this high. So what I'm gonna say is that according to me, the monthly time frame is bullish. Now dropping onto the weekly time frame, you can see we had quite a bit of a chop right there. Like we broke down right there, and then what we had, according to me, is a weekly trend change. So that is a weekly trend change. We can of course change it like this. I always suggest you guys mark up your structure breaks like this. So again, this is a weekly structure break. Let's make it border, right? And the market right now is in an overall push phase, right? It pushed very sharply, right? We have quite a couple of candles. So that is 6 weeks of the market actually being bullish, right? And where is it potentially going? Well, it's seeking liquidity. Like the first liquidity was here, but as we took it, we just continued to push up. So there was no huge reaction. So I can immediately presume or try to forecast that the market could potentially be headed for this high right there. And this weekly candle actually gave us a very nice pullback to the downside, and then it closed in a very bullish manner. So that is a very big rejection. So can we start expecting for the market to push us down even further? Well, maybe not until we take some major liquidity, because what I see is that the market quickly came into feeling that little bit of a weekly imbalance right there. And of course we have that bigger one down right here, but again, this one is most likely not going to get filled pretty soon because it's very far away, right? It's like 300 pips. So let's see. Overall weekly time frame is bullish, but then on the daily time frame we had a kind of a strange development. The market opened on Monday, kind of a choppy day on Monday, Tuesday bearish, Wednesday bearish, and actually like we had this kind of a structure break right there on the daily, and then the market went on and took out this low. Right now, like we can try to ask the question, is this a liquidity grab or is it a structure break? Because again, if we take it as a structure break, then of course this turns into our supply, and the market is right now into a daily bearish supply zone, right? So let's see what's gonna happen. I personally, just by looking at like the weekly and looking at the monthly as well, as everything is being bearish, I do believe the market actually pushed into the lows to grab the liquidity to create that weekly low, and then again we have 2 massively bullish days. So right now I won't say that the daily is really bearish, but if the 4-hourly is bullish, then I will just focus on longs. And yes, as you can see, like we had this push up. This is where the market aligned bearish on the FOEX, because this was the 4-hourly high. Sorry, low. This is the 4-hourly low. That's the 4-hourly high. The market just pulled back, like it tried to hold from this zone right there. You can see the reaction. It tried to hold. It flipped to the downside, but then it came in and grabbed the liquidity below right there. It filled in that weekly imbalance, then just immediately said nope. 4-hourly trend changed to the upside. It pulled back. Where did it pull back? 50%. Filling in the imbalance at the 50%.